It's Wednesday, September 28th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist, with New Wave Forecasting, with today's R&R of the markets and thoughts about what might happen tomorrow. So anyway, the big news today, of course, was OPEC, and I guess it looks like maybe the market believes that this reduction in output might actually help boost prices. I think it's probably a relatively safe bet with crude trading around $46 and OPEC acting the way they are, that they're probably shooting for $50 is a reasonable number for the price of crude. But all I can say with any degree of certainty here is that if we can push through this 47.25, 47.40 zone, which is currently the 76% retracement of the last subwave, then I do think we're going to go back up to 48.50, which was the number I put out on the afternoon update today. That's the 76% retracement of the entire three-wave decline. So the market looks pretty good. I think we'll probably be well supported if we come off towards the previous peaks here around 46.50, give or take. I would think that ought to be a good place to look for the market to hold and head back higher. If we were to fall back below 46, something is definitely not bullish in crude land. Moving on to nat gas. This is either a market that works for you or it just kills you. There's just no two ways about it, you know. And tomorrow, of course, is report day, so anything is typically possible. And again, I noted this morning that it wasn't clear if the market was going to collapse. I didn't think it was going to collapse. Now I think it's less likely to collapse, but I think we could still have a run at 302.5 to 305 possibly on this number tomorrow, and then we'll see. I don't know what to make of it. This is quite a mess, but I believe we are likely going to trade up, and it wouldn't surprise me if the next 5, possibly even 10 cents could be higher. Well, let's take a brief glance at the mess that is often construed as the euro currency. This short-term forecast is still the same. I am not budging on my view that the market is in a hurry to go absolutely nowhere. I think there is still a opportunity setting up. I'm hoping that wasn't the B wave low. If the market starts to go ballistic from here, then it will have been. Otherwise, I'm still holding out for a shot at 112.20 to 112 to be followed by a push back above 113.30. So still bullish on the euro. Just hoping that we didn't miss the long entry already. Well, gold is hit at a low this morning, or during the day, I believe, around 13.21, which was about $5 or $6 above, well, $4 anyway, above the 76% retracement. We did have some momentum divergence down there. The market is coming back. I think this 1330 level looks pretty important. That's going to be a conventional resistance line from yesterday's price action, as well as this detrended RSI resistance line, which has so far stopped the market. So this does look like we are at a really important time price confluence here in gold. Watch this 1330 level. I'm not sure how bullish it could be if we blow through here, but it certainly could be bullish, and we know the next resistance is up near 1337. So if we can pop above 1330 here, the big support's going to turn to 1328. Flipping our focus to the 10-year, I sure hope that isn't the end that we've missed in the 10-year. I've been talking about this being a terminal wave, and the reasons are the same as they were yesterday. We're getting wave overlap and momentum divergence, and however, it's just not clear if this move up is done or not at this point in time. So I don't know what to say. If the market gets hammered tomorrow, pretty clearly it's going to be, we'll have to call this thing done. Otherwise, we've got to stay open for a move up towards 131.24, 131.30. And if we get cracked, the bottom of the channel is down around 130.28, and I suppose that's really going to be the focus. If we get wave overlap back below here, the bulls are really going to have a problem. So we'll see. It's an interesting situation. I know the bulls think we've had a major upside breakout, and all I can say is, got to play show me on that one, because I don't think it's that cut and dried. Well, we know all the right numbers in the E-mini NASDAQ. We came right down to that 48.46 level, which was key here. That was the previous wave peak, and we have yet to push through the 76% retracement, which we identified here at 48.70, give or take. Again, I can't alter this forecast here. It still looks to me like the market will ideally make one more new high, and we'll go from there. So again, we start to be concerned if we were to fall below 48.40. Otherwise, everything still looks like we are on target for 4,900 for what could be a terminal wave in the E-mini NASDAQ. And finishing up here with the E-mini S&P, which had a pretty good day. Came back and made it all the way back to the 76% retracement from this last decline. Don't know what to make of this yet. Don't know how bullish the low here at 2130 something was. We could very well be on our way here. If that was an X wave, then we're going to start another ABC sequence up towards 2190. It's touch and go right now because, as again, we are right at the 76% retracement here at 2165. If I was an S&P bear, I would have to be a seller. I am just kind of don't have a strong opinion on the market right here. And given that the NASDAQ looks like it's probably going to do better, I would be probably consider myself cautious on the market. And it may turn out to be a huge error, but I did change my official Timers Digest position on the S&P today to neutral. I downgraded it from bullish. So if it explodes tomorrow, then I think I should be given all the credit if a new leg up has begun. So that's it for me today. September 28th, 2016. Ron Feinstein, New Wave Forecasting, back Sunday night.